Good afternoon, everyone. Welcome to Stock Durbar with Team MarketSmith India. My name is Rajshekar Kungari, Equity Research Analyst. I'll be starting this session, and this session will also be joined by my colleague Mr. Vakar and our head of research, Mr. Mahesh Joshi, can also join this session during the session. So before we go ahead into this session, first disclaimer is registration granted by SEBI, membership of BASL and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. This is a standard disclaimer for all of our podcasts and webinars, seminars, which we do periodically. So, just like the all the stock Durbar sessions, we'll start by analyzing Nifty's daily chart, and we move on to few other sectoral indices for the first 10 to 15 minutes. Then we'll be taking your stock specific queries, and me and Wokar will answer your queries according to our methodology. So, for the first 10 to 15 minutes, please don't ask any queries related to stocks. After the beginning part of the session, you can start asking your queries. So this is the Nifty's chart on our website. You can see here for the last 3 to 4 trading sessions, Nifty has been trading in a very uh, narrow range, and it is trading near its 21 DMA, which is green line here. And it is trading very close towards its 100 and 200 DMA, 150 DMAs. 50 DMA is the red line, and 100 DMA is the pink one. So both these key levels are just 1% from here, less than 1% from here. So reclaiming these levels going forward is very crucial for the index going forward. And coming to the market status, recently we have changed the market status to rally attempt from correction. And from here we are waiting for a follow-through session. Nifty follow-through session is when Nifty advances 1.5% or more on volume higher than the previous session. That follow-through session indicates that some fresh buying is happening in the market, especially from the institutional investors. And with that indication, we can start adding stocks to portfolio, and also we change the market status to confirm that. After changing the market status to rally attempt in these three trading sessions, highlighted portion here, Nifty has advanced nearly 2% in cumulatively in these three trading sessions, but the overall volume in these sessions has stayed lower. That is a sign of concern now. Uh, Even though Nifty found some kind of price action in these sessions, but the volume action was not constructive enough, and there is no follow buying happening. That is the reason we are still in a rally attempt. But when the follow-through session happens and the volume increases, definitely we'll be changing the market status to confirm the trend. By then, Nifty will also reclaim these two major index levels, that is 50 and 100 DMS. These might act as some kind of resistance for the next couple of sessions, but it's not a major sign of cautiousness. On the other hand, there is some overhead supply as well. I can see Nifty is down nearly 4% from the all-time high. So definitely there will be some overhead supply that will act as some kind of resistance going forward. So keeping all these things in mind, we have currently and keeping our methodology market status intact, we are still not added any stocks to portfolio. We have started adding the stocks to our buy watch list if you are following our mailers. And yesterday we have come up with our special Diwali picks as well for the coming year, and the report has been sent out as well. If you are not read it, please find time to read it. We have picked near 6 stocks in that report, and we are And by the end of 1 year from here, we'll be analyzing how these six stocks have performed with respect to Nifty and broader market indices as well. That is with the Nifty's chart, and we move on to other, starting with broader indices, then we move on to sectoral indices as well. First, Nifty Midcap. Similar to Nifty's chart, Nifty Midcap has also bottomed out recently around its 100 DMA here. And you look at and compare with the Nifty's overhead supply is less than 3% here. For the Nifty, it is more than 4%. And in the last 2 weeks, it has found good sub momentum as well. And you can see here it has reclaimed its 50 DMA as well. Today's candle is not updated here, but in the today's session as well, Nifty Midcap has advanced nearly 0.2%. The volume is also on the higher side in the mid-cap spaces, which is lagging in the Nifty Nifty 50 index. So Nifty mid-cap is placed relatively well when compared to Nifty, and the same is with the Nifty small cap as well. If you look at Nifty small cap index, you'll get to know. In fact, Nifty small cap is way better than Nifty mid cap and Nifty 50. You can see here it has made a new all-time high in the yesterday's trading session. Today's candle is missing in here, and it will be updated around 6 o'clock in the evening. But today it closed slightly on the negative with a negative bias of less than 0.2% decline. That's not a major sign of cautiousness. Uh, in the recent fall, it has breached its 50 DMA. It has not tested its 100 DMA, and I can see within a short span of 2 to 3 trading sessions, 50 DMA has been reclaimed and followed by 21 DMA as well, and it has found good momentum on the upside, similar to Nifty mid cap. So there is no major overhead supply for the Nifty small cap index. Stocks from these small and mid cap indices are doing very good in the market. And if that is followed by buying in the large cap spaces, definitely we'll see market status changing to confirm the and adding will definitely add stocks to portfolio as well. Next, moving on to some of the key indices which have good weightage in the market, starting with Nifty Bank, which has a very high weightage in the Nifty, and it will be bank's movement will determine the Nifty scores as well. So it is very important to analyze the Nifty Bank index as well. A couple of pointers is Nifty Bank is having a overall supply of 6%, and it is trading very near its 200 DMA. And previously also around this area, 200 DMA has been tested, and for a period of 2 to 3 weeks, it was tested and it was reclaimed and followed by very good buying as well. Similar action is happening here. 5 to 6 trading sessions, it traded below its 200 DMA and it has been reclaimed now. But we have some resistance going forward. These 50 and 200 DMAs will act as some kind of resistance going forward. And this overhead supply of 6% will definitely act as will give a supply of stocks in the market as well. So these levels has to be reclaimed on the higher volume. Then definitely we'll see follow buying happening in the banking stocks as well. One of the other key index to talk about is Nifty FMCG. It is doing good recently. You can see here yesterday action was good. It closed more than 0.6% higher and TDMA was reclaimed decisively. Overhead supply is just 3% here, so it's not a major fall which happened in these index. 200 DMA has not been tested at all, which is a very positive sign. Currently, it is trading above all its key moving averages, which is a very positive sign, which is not there in the Nifty Bank. But FMCG is definitely clearly trading above key moving averages. there is no major resistance going forward, but this 3% of overhead supply might act as a resistance going forward. But there is buying happening in the market. Definitely, it might it will not act as a major resistance. It will be reclaimed, and Nifty FMCG might make a new all-time high as well going forward. Nifty Auto also needs to be talked about. With the current festive season going on, and auto sales have also been at new all-time highs. Companies like Maruti and Hero MotoCorp have reported good set of numbers, which is a very positive sign that indicates demand across the country, not just from urban areas. Rural areas have also picked up momentum in terms of demand and in terms of buying interest. In terms of index, it is just 2.6% from the all-time highs. Currently, it is trading very close towards 50 and 21 DMS, and this level of 16,600 might act as some kind of resistance, because on the previous two occasions it acted as some resistance, that is 300 to 400 points from here. But if that resistance is broken on the higher side, definitely we'll see a new high happening on the Nifty Auto Index. I think with this we can start with your stock specific queries, and in between, if we see any sector thematic question being asked, we try to answer those queries as well. Hello, you can start posting your queries in the chat box, and we'll start answering your queries from our O'Neill methodology.
Raj Vakari, I'll start with the queries.
Sure, Waka.
Can you give me Astral?
Okay.
Thank you. So the stock at this moment is forming a consolidation base, and what's been really, problematic for this stock has been the price trend. I mean, the price trend is declining, and even the RS line is going down. Even the buyer demand is going down. That means more distribution is happening within the stock and less of accumulation. Yeah, as you can see, big red volume bars coming in, so which is never a good sign for any stock. So selling is happening in the stock, and going forward, the fundamentals behind the stock continues to remain very good. I mean, one of the leading players in your pipes business, in the adhesive business as well. Uh, and considering the construction activities and overall the infra push, what the government is behind, the story remains good. But with the fundamentals, you need to have supporting technicals as well, and technicals at this moment looks weak. So can currently avoid the stock if someone, I cannot see a prior breakout here. So, I cannot fathom where one would have taken position. Maybe you would have taken an aggressive position on reclaim of some key moving average. Then at this moment, can keep this low of the base, or the 17773 as probably their the stop loss level at this moment. And that's how you can keep it, because apart from 200 DMA, the stock is trading well below your 2150 and the 100 DMA at this. Uh, Apar, you can give me Apar, then you can give me Pidilite. So, just a disclaimer that Apar was there in our model portfolio stock. We had added and we had a good run with this stock, and we booked decent profits before selling came into. Selling came into the market, not just this stock, but the market as a whole. And when we had to downgrade the market to downtrend, at that moment we had to exit out of the stock. But at this moment, the stock hasn't shown any major signs of distribution at this moment. And if someone would have bought with us, can continue to hold so and can probably keep this recent low of 4645. 4645 as their stop loss levels, and if with that they can move ahead. And overall, the ratings for the stock looks really good, and the stock would be getting institutional interest as well. I mean, can you show me fund holding, Raj? Yes. So the fund holding for the stock is improving very, very well. Even look at the brilliant ROE for the stock. The ROE for the stock is 29%. So even that is very good. I mean, probably going forward, if the stock reclaims the 50 and the 200 DMA on above average volume, probably what's missing at this moment in the stock is volume. So it's kind of consolidating at this moment. Either it will form a new base, or it can even reclaim this 2150 DMA. If that happens, maybe you can see a next set of rally in this stock as well. Pidlite, yeah, Pidlite, you can give me. So the stock did come up with its results post market session yesterday, and how I remember it, apart from revenue, which was a minor miss. I mean, not revenue, EBITDA was a minor miss. Uh, PAT was just above estimates, and even there was margin expansion as well. So overall, result wasn't that bad and not that good as well, and that's why you can see indecisive movement in this stock. And but overall, the fundamentals. The being the largest adhesive player in India, you can see fundamentals for the company continues to remain good. Good ROE at 18%, EPS strength at 80. But what we are earlier discussing, that fundamentals are just not enough. You can see the consolidation base; it's very wide and long, and that has been the problem for the stock. Plus, the price strength at 23 is very bad, and similarly for your buyer demand as well. It needs to do a lot of catch up on the technical front, and for the stock to probably come in our radar into from the canceling perspective. But overall, to understand the industries of adhesive and to understand the business as a whole, it can be a good stock to anytime have a look. If someone probably went into bottom fishing and bought this stock, can keep the 21 DMA as their stop loss levels. If that is breached, please exit. On the upside, if all key moving averages gets reclaimed, can then probably trail your stop losses and keep the stock for some time. Mm, take a last one. I'll take Action Construction Ace. I mean, the stock at this moment has broken out, but today's action was not that good. Yes, CPS is due today, and that is why this has happened. One can see. Uh, all the fundamentals, the price trend, the buyer demand for the stock continues to remain good. I mean, considering, markets to be in downtrend at this moment, and that is why at this breakout we didn't go after. Overall, it is a good stock to keep in your watch list, considering all the parameters getting taken in terms of increase in fund holding, all the buyer demand, everything being good. I mean, today's action was kind of negative, so let's wait. I mean, if someone has already bought it at the breakout, can probably keep that 7 to 8% stop loss, what William O'Neill suggests. And I mean, after that, I mean, if that gets breached, please exit out. I mean, on the upside, if it comes back into the buy range with some good volumes, re-breakout happening, uh, and if markets become supportive again, I mean, considering us to have a very M factor being very important, that is the market factor. If from rally attempt we get an FTD, go into confirmed uptrend, or even the buy switch gets turned on, if some key moving averages get reclaimed, then maybe a good stop to probably keep it in your buy watch list. Raj, you can take some queries.
Thanks, Apar. I'll take this one. I'll start with Ircon and Ircon International. Stock is looking very good. I can see on the ratings wise, it has very superior ratings, both fundamental and technical ratings as well. EPS of 80. You can say how consistent the company was able to generate growth in terms of sales and profit consistently on quarter-on-quarter basis. And technically, it is doing very good. You can see a price strength of 94 indicates very high performance of the stock when compared to the general market. Buyer demand is also very good at B plus, indicating accumulation happening within the stock. Though that is reflected in the blue bars as well. You can see a couple of blue bars with a very huge volume, indicating institutional or big players taking positions. Currently, it is trading in a stage for double bottom base. You can see here, and it is another 6% the pivot. So we need to wait for the 6% gain in this particular stock. But a stock like this, 4 to 5% gain can happen within a session. So it's not a major difference between the pivot and the current market price. But the only concern is the overall market direction is still in rally item. So this can be kept in a buy watch list as well. And uh, and also keep in mind that it is a stage four base. So there is some risk related to late stage basis as well. And if you want to know about the late stage basis, you can browse through our learning articles. We have a couple of learning articles related to late stages and why it is important to understand the base count and not to invest in late stage base breakouts. So only a couple of pointers. Otherwise, the stock is looking very good. I can take a position, but looking at the market direction and the stage count, it is not advised to take a entry at this particular point. Next is Railtel, another company which is related to Indian Railways. And Railtel, we have actually incorporated this stock in our Diwali report as well. We have described about the stock prospects and owner's methodology in that report as well. So to repeat it, the stock has very good set of ratings. That is the first and foremost point to look at. EPS of 87, indicating very good fundamental character. You can see the numbers as well. The growth of nearly 50 to 40 to 50% growth in the revenue front. On the EPS front as well, last 3 quarters have been very good, and previous 2 quarters are not so good. But we need to look at the last 3 quarters earnings with more weightage when compared to the other quarters. And recent performance will play a huge role in stocks prospects. So that is the reason we give high weightage to the last 3 quarters earnings. And coming to the stocks chart, you can see here it is a stage two consolidation base, and it has broken out actually yesterday, but on the closing basis, it closed below the pivot, so it's not a major, it is not a clear breakout. And today also it moved sideways and closed in the lower negative territory. So that follow buying is not happening, it is lagging. Even though the volume is very good during the right side of the base formation, you can see here the stock moved higher on very good volume, which is a positive sign. But that momentum or follow buying, which is needed for the stock to break out and advance 20 to 25% is lagging, not just with this Railtel, but all other stocks as well. But if you're looking for a entry or fresh position to add to portfolio, definitely it is one of the good contender. That is the reason we have picked this stock in our report as well. On the stop loss front, you can consider around 3 which is 10% from here. So near to that, you can consider keeping a stop loss and continue to hold until that level is reached. There are a few queries from the YouTube as well. Let's take a couple of them and we can come back to these Zoom meeting queries. One is the KNR Constructions. Fundamentally, the rating is very good, EPS of 87, but the technical ratings have beaten down. The price trend, especially if you look at the RS line, has come down and the rating has declined to 43. Currently, it is trading in a stage 1B flat base, but it is trading near the base low. It might undercut the base as well, so we are not sure. But the uh, overall momentum for the stock is on the downside, which is not a positive sign. It has found a support at its 100 DMA, which is the pink line here, on more than two to three occasions. It has tested this level, and today also this level has been tested and successfully closed above that level. So that might act as a support going forward. But if that level is breached, we might see an undercut of this base, and base will definitely reset after that. And if you are looking for fresh entry in this stock, it is not advised. There is a long way to go. RS line needs to trend higher. RS rating should also improve to 60 to 70 at least before taking an entry. One more query from the YouTube is Ion Exchange. It is a stage 6 breakout. Very rare you see such kind of breakouts happening. Stage 6. Normally we'd see a stage up to stage 3 or 4, but stage 5, stage 6 breakouts are very rare in the market. So I think this is one of the stock which are broken out from the stage 6. But you can see here after breaking out from the stage 6 base, it has not formed the required momentum and it has come down below its pivot, and currently the 3DMA has also been tested. In the last two trading sessions, the action is very good, but it is still trading below its pivot. So it's not advised, as mentioned previously as well, chasing extended stocks. It's a slightly extended stock, we can say, because it's a stage 6 breakout, and it is around 30 to 40% extended from the total DMA as well. And if you are taken position from the breakout at this point, you would have hit the stop loss as well, because it has fallen more than 80% from the breakout level. And the ratings wise, it is looking very good. You can see ratings are very strong. EPS of 87. Price strength is also very good at 86. Institutional holding is also very good. You can see here number of funds which are invested has increased more than 26% in the previous quarter. Earnings wise also, it is looking very good. It is reflected in the EPS strength of the stock. You can see consistent 20 to 30% growth in the sales, and EPS has also been increased in the similar terms. And next is I think that this is KPIT. I'll take. Again, it's a very late stage based breakout. It's a stage 5 breakout which happened. As it is also one of the rare stock which has broken out from a stage 5 base. And one thing which is very good in this particular stock is when the market is going down, this stock has moved in the reverse direction and it has made a new all-time highs. It has found a good momentum and the volume was also on the higher side. This particular stock. That is because the recent earnings from the stock have been very good. You can see EPS has increased 27%, sales have grown more than 40%, ROE is also very good at 20%. That is one of the reason why the stock has moved higher and found good interest from the big institutional players as well. But you can say it's an extended stock from the pivot. Taking a fresh entry is not advised. But if you're already holding it, you can keep a level of stop loss near 21 DMA or 50 DMA, which are 8 to 12% from the current market price. EPS is slightly lower. That is because of March quarter profit has come down. But other than that, the company has grown very good in terms of sales and profits. I'll take one more query. Zensar Technologies Tech, which is related to IT space. Yes, broken out from stage 3, but you can say it's a failed breakout because as soon as it has broken out, it failed to close above the pivot and it found resistance at the pivot. And in the next 3 to 4 trading sessions, continue to fell. And the volume was also on the higher side when the stock started falling. And 100 DMA was also tested during the fall. Currently, it is trading very close towards 100 DMA. One can say it has a failed breakout because it has fallen more than 10% from the breakout. Ratings wise, it is looking very good. Yes, doesn't change much often, but technicals, the RS line has come down as well. You can see after forming a blue dot, RS line has declined and buyer demand has also come down slightly to B plus from A category. If you are holding this stock, it's better to keep a stop loss, very tight stop loss below 100 DMA because that is not breached in the recent fall as well. So you can keep that level as a stop loss and continue to hold it. But if that level is breached, please be watchful for that level and please exit as soon as that level is breached because there is no major support after that particular level.
Vakar, I'll take in some queries.
Sure.
Yeah. So had some YouTube queries. So let's clear that first. Actually, someone was asking, how could we enable stage information in the chart? So just, just can you show it to him? Click on that base stage, and with that base stage, someone can understand. Okay, yeah, as simple as that. You get all the information in terms of the pattern, the stage, the pivot, the length, the depth, everything. And even, it's the movement from the 50, 200, 20, 100 DMA, everything. That's how you can get the information. Uh, we'll go to some YouTube queries now. Ion Exchange you have taken, right?
Which one? Yes, I have taken iron exchange.
So give me KNR construction and after that Kfin Tech.
KNR also is done. I can take Kfin.
Okay, so then give me Kfin Tech. Can you hear my voice? Because I'm seeing some messages that they can't hear me.
Apar, it is clear, but I think the user needs to enable.
Okay, okay, no problem. Okay, so give me Kfin Tech, and after that, Sanghvi. So, if you look at this stock has recently broken out from a stage to flat base. Earlier, the stock, when it broke out from the first base, it was, uh, I mean, just a disclaimer, it was there in our model portfolio stock as well at that moment. And when the markets turned on a downtrend basis, we had to exit on the stock. So, again, please explain stage numbers, please. So, what happens is just I'll give you a very brief, and there are learning articles behind the scene. So, when the stock advances more than 20 to 25% from a breakout from one stage to the next stage, then numerically the stage count increases. That is from 1 to 3 and above. And when stage counts goes on a flattish level, that is A, B, C. What happens on that front is that when the stock after breakout is not able to move 20 to 25%, then it is moving on a sideways direction, then something like a base on base gets formed, like 1A, 1B, 1C, 1D kind of. Let's coming back to the stock. Overall price trend, buy demand, everything for the stock looks very good. RS line is moving higher. The only thing that is not good at this moment is the EPS strength, and plus the fund holding for this stock is slightly decreasing. If someone would have bought this stock at breakout, considering it's a very good breakout on above average volumes, can continue to hold and keep the 7 to 8% as their stop loss levels. The next is Sanghvi Movers. Sanghvi Movers. Yeah, second one. A disclaimer that it's one of the stocks in our Diwali report. It's already there on our website, and people can have a look at the stock. We've already discussed about the stock. Largest crane player in India and one of the largest crane players in Asia and across the globe as well. And it's even venturing into like construct EPC business, that is the construction or and the overall layout for the windmills as well. So natural extension to what these guys do. Overall, looks very good. Did had a successful breakout, but at this moment is consolidating. If you look at all the ratings and everything, looks superb. Fund holding for the stock is improving day in day out, and similarly, return of equity 13% is very good. Not a late stage count base, and the RS is hitting and being good also. It's a good sign. Considering the stock is consolidating at this moment, so can probably wait, and it's below the pivot as well. Uh, if markets move in a, get an FTD or buy switch gets turned on, then it can be a very good stock to watch out for. Someone who probably had conviction earlier, bought it independently or bought at the breakout, can continue to hold so and keep this 21 DMA as their trailing stop loss line for that time, because considering now the stock is under some uh, bearish momentum at this phase. The next we can look at it is Torrent Power. Again, another YouTube query. So, post the result, as you can see, the stock, reversed very badly on a higher volume, and it's not a good sign, as you can see. And if this going forward, if the stock breaches the 21 and the 50 DMA, if someone's holding onto the stock, can probably exit on this exit the stock, because there has been some technical deterioration at this moment. On the flip side, if it's able to hold the 21 DMA and then move higher, then it can be a really good one. And there's no problem holding onto the stock. But if there is any deterioration on the technical front, from the 21 and the 50 front can exit out of. So, sir, the Diwali report, Mr. Kishan Chand Chandani, it's already there on the website, and people can see it. It's there in the report section at this point. And yeah, Raj is showing it. Samar 2080, that's the title of the report. Yes, William O'Neill Diwali pick, Samar 2080, already there. Yeah. So we'll go ahead with the discussion, and people, I mean, the users, the readers can have a look at this report later when they have a chance. Is Deepak fertilizer taken?
No, no, it's not.
Okay, then be the Deepak fertilizers. So, I mean, considering, I mean, it had, I mean, in 2021 and even parts of 22, the stock had a brilliant rally. When at that moment, all the fertilizer stock was at that moment doing well. I mean, look at the multi-bagger the stock has been. I mean, from the lows of COVID to the highs that it reached, been a 20 bagger. And post that, it's, I mean, all fertilizer stocks are probably showing some correction at this moment. And similarly, you can see even with this stock as well, there is realization pressure, volumes pressure for these stocks at this moment, and that is what is getting reflected in the price as price strength is deteriorating. Similarly, EPS strength is also deteriorating for the stock. And if someone probably had conviction or went for a little bottom fishing and bought at the lows, I mean, can hold till the point in time in the uh, at this point was 200 DMA and 100 DMA is pretty close. I mean, can you show me how far it is? I mean, at this 200 and 100 for this stock. If the 200 and the 100 DMA gets breached, one can exit on the stock. If I mean, from the O'Neill front, if we talk about it, it's not there on the radar because the technical, there's been a huge technical deterioration. So going forward, if the stock probably makes a new base and the overall the price rating improves, plus I mean the back demand improves, and stock shows good sign of accumulation. And even on the fundamentals front, you can see last couple of results for the stock has not been that good. So I mean the stock has to show good numbers on the sales and the EPS front as well. So once that happens, improvement on all the front happens. Probably that's what I was talking about. The last 3 to 4 results have been very choppy. I mean, compare it till the last September 22 results, and after that, this results have been very choppy. So once some good numbers start coming in, uh, all the price correction is over, the price strength coming in to the stock. Once then you can easily have a look at this stock.
Thanks, Vakar. I'll take a few queries now.
Sure.
Bajaj, Finserv, and Cummins. Bajaj Finserv, one of the leading NBFC company in the country. Currently, it is trying to break out from the stage 3 cup with handle, but overall base pattern itself is not idle. You can see length is almost it's 270 trading session, that is more than a year, and it found resistance at the pivot level. Exactly, you can see here that it was not able to close above the pivot. It's classic example of why we need to wait for the stock to close above pivot to add it to portfolio. And from there, we can see here it has fallen nearly 10%, and 50 DMA has also been tested. But recently, that is has been reclaimed as well, but it's not a major rebound from the 50 DMA. Still, it is lagging in terms of momentum. EPS still is intact at 91, but the price strength has come down. RS line has fallen down. Price strength came down to 40, which is not so good. Buyer demand has also come down because of some kind of distribution happening. There are two towers of blue towers as well, but that is followed by the red towers as well. So there is accumulation happening as well as distribution happening in the stock. But for us, we need to see more of accumulation happening when compared to the distribution. So that's when this rating will improve, and that is when we will see a positive momentum happening or picking up in any stock. And taking a fresh entry is not advised here at this moment. Let's see if the stock breaks out and if the RS line improves from there. And if the market structure also improves, then I can consider. But until then, better to look out for other stocks. In the recent discussion, also we have seen more than 3 to 4 stocks which are looking very good. So we can stick with those stocks when compared to Bajaj. Next is Cummins. It's a stage three consolidation base which is forming in the current moment. But if you see here, after breaking out from stage 3B cup base pattern, it has advanced, but quickly it gave up all its gains. That is the reason it is, and from there it has been consolidating near its 50 and 200 DMS. 200 DMS has acting as a very good support, which is a very positive sign. On the fundamental side, there is no doubt about this company's fundamental character, EPS of 91, and return on equity is also very good at 21%. Earnings wise, it is looking very good, except for the current quarter sales, that is September quarter sales have come down slightly from the previous September year-on-year basis, 3% decline, but overall on the other front, margins front, and the bottom line front, the growth is very good. Number of funds section is also looking very attractive. You can see here nearly uh, one third of funds have been added in the last quarter. That indicates a very good interest for this stock among the institutional investors. The only thing that is lagging is the price strength. That technical character has been on the downside. Uh, because the stock has been moving sideways and it has been underperforming when compared to the other stocks. This rating has been lower at less than 50. Buyer demand is also not so strong enough. Let's see how the stock reacts. Or when it comes to pivot, this will definitely improve to 50 to 60. And if the breakout happens on good volume, and there is still 12% to go from here, so it's a very long way. Looking at the current movement in the stock, that is less than 1% movement happening on daily basis. So 12% is a long way to go. And by then, most of the ratings will also change. We can take a call after that. I'll take Rainbow Children's Hospitals. Recent breakout happened in the month of May, but from there it has been a narrow range of. Actually, it has came to the profit booking zone, that is a green highlighted area, and from there it is moving sideways and sideways. And currently on the momentum side, it is on the negative side. There are more bearish signals compared to bullish signals, and it reached its 50 and 100 and 21 DMS as well. Only moving average that is not reached is the 200 DMA, which is not a positive sign. Technicals have taken a hit because of this recent fall. RS line, you can see here, it has formed a blue dot here, but within next 10 trading sessions, it quickly came down on the volumes also. So RS line also came down sharply, and RS rating has declined to 52. EPS has been staying intact, but the EPS doesn't give a overall picture of the stock is performing. But RS rating and buyer demand are the two indicators which are technical in nature will give good indication of stocks movement and the prospect of stock going forward. So overall, it is on the negative side. It's better to avoid these stocks. It has not formed any base pattern. Let's see. Let's wait for the stock to form a base pattern. Fundamentally it is looking good. So RS will definitely improve. The stock picks up momentum, and the volume is also on the higher side when it is moving higher. Definitely, technical ratings will improve. And if it forms a base pattern and breaks out from there, which is another 22 or 30 trading sessions of time, we can take a call. But until then, it's in a no trade zone in the current moment.
Thanks, Raj. Vakaria, and taking some queries.
Uh,
Yeah. So people, I mean, someone was asking PI Industries again and again. So I mean, I guess we must have missed out on that query. So let's take PI Industries first, and then we'll go to others. So yes, yeah, even post, I mean, market close yesterday, that is Wednesday session, it reported its earnings as well. So PAT was a good beat on the estimates, even margin expansion as well. EBITDA margins are expanded. Overall, as you can still see, the EPS strength for the stock continues to remain very good. I mean, 4, 5, 6 quarters, you look at it, it's very good. I mean, what's probably the stock needs to do catch up is on the price and on the volume front. That is on the technicals. I mean, price strength of 27 is, I mean, very bad at this moment. And similarly, the buyer demand as well. And if that improves, I mean, going forward till the breakout happens, I mean, I mean, price trend at least needs to, I mean, improve till the fair zone and even buyer demand to a good zone, and then RS line to probably hit new highs for it to come to our radar. I mean, through the canceling radar. If someone would have bought this stock maybe at the reclaim of 200 DMA or the 50 DMA, can continue to do so. And Raj, can you show me how far is the 50 DMA? 50 DMA is around 3.9, 200 is 6.4. So probably, I mean, no point, can easily keep the 200 DMA as their stop loss levels. Pretty much ideal around the 6 to 7% kind of mark. And if someone has already bought it, can keep that. And I mean, on if we look at it just from the canceling front, I mean, not in a buy watch list or buy watch list at this moment. Let it make some improvement on the technical front. At that moment, if it does, then can have a good look at this stock. Uh, was lemon tree taken? Lemon tree IRCTC?
no, no, no.
Okay, give me lemon tree then IRCTC. So guys, if we are able, I mean, we won't be able to have all the queries addressed. If you are missing out on some queries, don't worry. You can always mail us, and we'll be there to answer it for you. So coming back to lemon tree, I mean, in the past few quarters, all the hotel stocks have been doing very good in terms of their average realization rate. Their occupancy rate have been touching pre-COVID highs at this moment. So been very good. But the only problem is that many hotel stocks are forming late stage basis. Even this is a late stage, I guess. Can you show the stage count? Yes, stage five stay earlier. So if you talk about lemon tree, you talk about Indian hotels, major stocks, good hotel stocks are forming late stage basis at this moment. I mean, good momentum in terms of fund holding in the stock, in terms of results. of the stock. Someone would have bought it at a prior breakout, maybe at a 2 or 3 breakout, can continue to hold so. And considering you'd be sitting on good gains, if the stock probably at this moment, the 50 DMA and 21 DMA is pretty close, so can keep the 100 DMA as your stop loss level. 100 DMA is around 11. It's little deep, so what I'll advise is maybe keep 50 DMA as partial profit booking, and after that, and if it breaches 100, because last time, as you can see, prior reaction at the 100 DMA, it reached the 100 DMA and then it reclaimed the 100 DMA in an intraday session itself. So that's why I'm more concerned about the 100 DMA. If that gets breached and the closing happens below 100 DMA, exit it out completely. But I mean, uh, to partially book it at the 50 DMA is the investor's call at this moment. After this is IRCTC. Thank you. So, very bad price strength for this stock, as you can see. Stock, the RS line is moving lower, which is not a good sign. The stock base is very wide and loose. Again, not a good sign. So considering from the canceling perspective, even for to have it in our watch list, we won't, because the technicals are not that good and can easily be an avoid for us at this moment. Uh, Raj, we are already near the end mark, so you can have a couple of queries and then end the session. Raj, you there? Okay. I'll take in a few more queries then. Raj, can you give me Waaree Renewables? Yeah. I mean, 2, 3 negatives from the O'Neill front. One, very late stage formation at this moment. Two, there are no funds invested in this stock. So on both the fronts, it will be a no-no from our side. If someone would have probably bought it on earlier breakouts or some key moving averages get reclaimed, can continue to hold this stock. If there's a cluster of 2150 and 100 DMA at this moment. So if the cluster gets breached, the 100 DMA gets breached, that is 5.4% from here, can exit out of the stock. The liquidity seems a problem in this stock. So, if you're already sitting on good gains, some key moving averages get breached, then you can easily exit out of this. Raj, you can take a couple of queries and then wrap the session. We're already past the 5:30 mark.
Sure, Midcap, yeah.
Yeah.
Uh, I think a couple of users are asking about this company, that is Associated Alcohols and Breweries. It's a very small market cap company. It is, you can see here, it is just 800 crores of market cap, which is on the near the threshold of our criteria. But other parameters are not looking good. One is number of funds holding the stock. We would like to see minimum of 10 funds holding. Ratings wise, also fundamental rating of EPS of 51, price strength of 46 are not looking good. You can see here consistently the profits have fallen except for the September quarter, the last 4 quarters, you can see decline in the profits. Sales have also come down in the June quarter. So the company has not been consistent in terms of the growth, and market cap is also on the lower side, and number of funds is also on the lower than our threshold. So it's a no from us from the warning methodology. But if you have taken position, I can keep a stop loss of 100 DMA, which acted as a good support in the month of October last week. So that can be kept as a stop loss at a couple of points below 100 DMA. And if that level is breached, you can exit. But taking a fresh entry is not advised. I'll take final query for the session and we can call it a day here. That is Kalyan Jewelers. Festive season, one of the stock will, that is jewelry stocks will definitely in the limelight because lots of buying happens in these companies. And you can see here the stock price is also reflecting the same very good rally from the June breakout of stage 2 consolidation. It has moved. You can see here it is highlighted in less than 100 trading sessions. It moved more than 150%, which is a very positive sign. And currently it is trading near its highs. There is no overhead supply going forward, and volumes are also looking good. Technically, it is looking very good because of outperformance of the stock. RS is at 97. The buyer demand is at A plus, but fundamentally, EPS is slightly poor. It is beaten down because of March quarter earnings. Otherwise, it's looking very good, but currently it is not forming any base pattern, so there is no question of entry at this current moment. And if you're already holding it, you can keep a stop loss near its 21 DMA, which is another 12% from here. So it is highly extended from the 200 DMA, more than 105%. So any hiccup in the market or any selling pressure in the market, definitely stocks like these, which are extended more than 100% from the 200 DMA, will come under pressure, and 10 to 15% fall can happen within a session. So please be watchful, and 21 DMA can be kept as stop loss. So there is one more query from the YouTube that is last query, and you can call it a session after that. That is Banco products. Ratings wise, it is looking very good. That is a first impression of this stock. All the ratings are looking fantastic, above 90, both the EPS and RS. It's a stage 3 of double bottom base breakout, which happened in the yesterday's session, and today's also a follow-up buying has happened on a high volume. What we like in this kind of base is whenever the stock fallen, the volume has come down sharply, and during the right side of the base formation, that is when stock is moving higher, the volume has also increased higher. That is a very positive sign of a ideal base formation. It's looking very good on the base formation front, and the breakout has also happened on above average volume. So you can say it's a strong breakout. A number of funds have also improved more than 25%. So again, a positive sign. So if you are looking for a fresh entry, I can consider this stock as well. But start with less capital rather than going with your full exposure. Start with 10 to 20% of your capital, and then you can start a pyramiding approach in the current market, because still the market is in rally item. So whenever follow through session happens, definitely you can go all in into the market. But currently, it is advised to stay or to keep the exposure less than 60-70% of your capital. I think there are a few queries which are not answered during the session, but I think we most of the queries have been answered by Kar and myself. I think if you are missing out on any stock, we'll definitely write. If you write to us on email, we'll take time to answer those queries as well. Just like the way we explained here, will explain in terms of owning methodology and will reply back to your emails. I hope it was a learning session for everyone here, the users as well as Team MarketSmith as well, and we'll take your queries and we'll also into queries and reply back to you guys. And thanks everyone for joining the today's session. And tomorrow again we'll be back with our pre-bill at 8:45 in the morning. Please find time to join that session as well. It will be a very small podcast of 10 to 12 minutes of podcast. So if you find time around that area, please join me. We'll talk about more about how the market is expected to open and key stocks which are the news in that podcast. Thanks everyone for joining, and I think we can call it a session now.